Good morning, everyone, and welcome to another edition of Roadhouse Last Call, our morning show that tells you about the morning and what happened the night before. Sometimes mixed in with a little bit of entertainment, sometimes not. Bender, how are you on this fine Monday morning?
Man, I'm doing all right. Doing all right. How are
Bender
you?
is, man, I've got some stories to tell, buddy.
That involve apparently chainsaws and lube.
Well, no. Actually, that was all success. We're talking wild success on the weekend as far as knocking stuff down. Uh, Things about life and death. A very, very interesting weekend. Maybe we'll get into it later on. Maybe not. But yeah, man, how did the dozing go?
Well, it was going really well, and then the dozer broke down. Um, so I had to call the company that I read it from. They had to come out. They tried to fix it. They said it was fixed. So I went back out there, and it broke down again very quickly, like within an hour. So man, it looked like a bomb went off. The time that I got to run it, I got a lot done. But yeah, having it break down twice and kind of getting stuck and not being able to do a whole lot, it became like I was just taking my truck up in there, wrapping chains around trees and ripping them out. And I was the whole thing, man, it was so hot. Like this weekend, so yesterday we had an early heat wave, early for the year, and ERCOT yesterday said that it was the highest power draw demand that they've seen on record happened yesterday. So it was like 106 and humid, and it was just miserable. and it was like I was irritated that this bulldozer wasn't running, and I was irritated that I couldn't get anything done, and irritated that it was hot. So I took a chainsaw out there, just started cutting stuff down, dragging it out with a chain.
Chainsaw's fun, man. It's really, really fun.
The bulldozer's a lot more fun.
Cleaning up is not fun.
No.
But chopping shit down, man, it's like that's definitely fun. Well, all right, man. So you had a frustrating weekend, and it looks as if you're going to be matched with a frustrating week. So
Yeah.
there you
Yeah.
have it.
Yep.
All right. As far as news that's going around, I'm going to summarize it very clearly. Everything's fucked. Spell it with me. Fucked. Fucked. The Fed has put itself in a really, really jacked up position. They're going to have their little rate announcement. They're going to do whatever they're going to do. The market's going to react how it's going to react. We're going to be talking about bear market. We're going to be talking about recession. We're going to be talking about increases in unemployment. We're going to be talking about goods continuing to go up in price. We're going to be talking about inventories being overrun and not what they should be. We're going to talk about cutting back on spending by the consumer. We're going to talk about the consumer not being happy. We're going to talk about China probably shutting down again. We're going to talk about global markets being all messed up. We're going to talk about the yen being at 2 decade lows. We're going to talk about the dollar being at 2 decade highs. We're going to be talking about everything that you can possibly talk about to make the picture the most ugliest fucking picture to ever exist. That's what we got. That is on the buffet for this week. Okay, that's what it is. Wednesday is obviously the big day. The risk off at this point would be to cover. We've seen this before, a covering rally going into Fed. God knows there is not any call flow sitting up there. People are not necessarily really and truly buying with a heavy hand. Over the last couple of weeks, we've noticed that even on the up days and the moves up, we are seeing very, very small money entering the game to play. We're not seeing big whops coming in to play ball. So we have a pretty massive gap down. Gaps have a tendency to want to at least pretend to fill. But I'll leave that up to Bender so he can sort through what he sees over there.
All right. Yeah, you do have that gap above. Starts at about 38.80 to about 38.96. As far as, all right, so if we start a process of what appears to be a bounce, right? We have a fib at 38.22. We're sitting at 38.10 right now. So we got a fib at 38.22. Watch there. I've got a 38.71 was a previous level of support. I would look for that to, potentially act as resistance. And then, the entrance of that gap around 38.80. So those are kind of the first levels I would look at as resistance to the upside. As far as support levels are concerned, we had the overnight low, 37.98. If we give that up, there is we've got a trend line that would come in kind of depending on how long it takes to get there. There's a trend line that comes in at 37.70, and then I've got a bigger, what I would call a more important trend line that would come in around 37.35. Again, depending on how long it takes us to reach that level. Those are kind of the kind of the plus or minus 80 to 100 points. Those are the levels I'd be looking at. I'm going to post a chart in Discord that kind of show those trend lines that I was just referring to.
Thank you very much. So the dollar is another one that went on an absolute tear. It's up again. It did reject that previous high that it had going back to May. So it'll be curious to see what the dollar wants to do in through there. The yen is something that's really, really taken it in the face as the dollar has moved higher. So, and I think there was conversation yesterday or last night as far as maybe the government stepping in to stop the bleeding on the yen. That's something that's being discussed, which could have an impact on the dollar as far as, if nothing else, creating a pause. We're talking about the yield curve inverting again. It's like, look, I can't say it enough. Every last piece of negative news that could be out there is being pumped and pumped hard. There's nothing bullish in any capacity about any of this other than being, okay, is it cheap enough yet? Is it not cheap enough yet? It's like, can the Fed get it under control? Do we have to go back to soup lines before the Fed gets it under control? What do we have to do to get it under control? And it's not even so much talking about inflation, but it's like, what do we have to do to stop the bleeding? It's like, you have to imagine, it's like, it's not, when you get in environments like this that are so caustic and so negative and the price action is so detrimental and you really, really start hitting on people's nerves in a way to where all of a sudden you're being like, oh man, I can't wait to buy that new truck. It's like, I can't buy that truck anymore. I can't buy that anymore. I can't do that anymore. I want to retire. I can't retire anymore. It's like the emotional piece of it is really, really what's going to drive the market at this point, because we're beyond technical. It's like we've snapped pretty much everything that I can see except for the 200 on the weekly on SPY. That's it. IWM has already breached it. But the 200 on the weekly is something that is still kind of is still there, but we have to go to, I believe, 350 to even play with that game. So with that being said, with something being so sour and having a binary event on Wednesday, either we flush going in or we rally. But there's no way that we stay exactly where we are right now going into Fed. It's like the emotions are way too high. Way too high. Mr. Stockington, what do you have for us, sir?
Hello, good morning. Yeah, so all the news, everything wrapping down. So obviously, the watch list levels that I put together last night are a little bit adjusted here. So I dropped a chart in the room here on Discord. What came down to another dark pool. I mean, we kind of had this exact conversation last week where we were saying, okay, gapped up. We had this dark pool at 102, and now we're operating like $20 above that. So now we're coming back down to some of these dark pools. So I've got 104.32 as a dark pool on Baba. We'll be watching that. ETA. I'm just kind of using the morning range. What were the key levels so far today? So those are kind of all in Discord. The interesting thing that I dropped here into the chat in the Roadhouse is this pivot table that I just stole from someone else in the main chat here on Blackbox. And basically what you do is just drop in at the end of the day the raw data, and this creates a really easy little table so you can pick what your watch list is and how much dark pool it received at a particular price level. So just kind of the really quick breakdown of that. There was the dark pool on Amazon, decent size at 109.65. Baba always gets some pretty good dark pool lately. It has been anyways. 110.35. That was 639 million there. So Spy had some good ones. There was a really big line there at 401.60. So that's a good line to have on your chart for when we move back up. But yeah, so really liking that pivot table. It's something I'll be using and referencing as we move forward here. And then, I got the chart dropped in the room for some levels to keep on watch for today.
Very good. Do you see anything actionable with anything that you put out there? Like as far as, hey, I want to get in on this, or this is what I'm really looking at the open.
For me personally, last week sucked. I was getting my ass kicked. So I've got my journal out here. Every freaking trade I take, I'm going to be writing it down and, sharing with you guys kind of like the setup I see. We had some nice puts on Friday on AMD and Tesla, things like that. So I am going to be taking it very slow and just looking for like picture perfect chart technical setup, make sure UVXY is lining up, the flow. So as of the moment, I'm not going to be, going in guns blazing. I mean, Ava could end up being a nice short here today. It's already losing that dark pool, but other than that, I'm just going to be taking it slow and see what flow says.
Okay. All right, very good. I think that's smart. It's good to know yourself. It's good to know when you need to kind of recheck it. I know last week was pretty miserable for me as far as trading. Also, together I think 2 good days, and then went on a 3-day. As to how many different ways can I punch myself in the dick? That was the last 3 days of the week, so that was fun. I did a little bit of kind of sitting and talking to myself and trying to figure out. It's like trying to find the one consistent thing, the one piece that's been consistent ever since late December, January. The one thing that's been the most consistent. And there was only one thing that I could really draw on that had the most consistency throughout, and that was the flow on IWM. Um, IWM has been absolutely, I don't want to say ravaged, but it's been beat up pretty good from a flow standpoint. There has been little to no upside targets. Even when we get activity on SPY, we get activity on the Qs, we get some activity in the DIA, we get that type of activity. We were not getting real activity into IWM. So if we're starting, from my standpoint, when I'm starting to look for tells and find one consistent through line with all of this, it's been IWM and the absolute, assault on it as far as, giving it a nice haircut, or if nothing else, the lack of bullish sentiment regarding the IWM. I think that I'm going to start paying more attention this week to that flow. I think that's going to be ultimately, if there's going to be a bottoming action, I think it will see it on the IWM and probably the NASDAQ before we see it anywhere else. There's just a lot of variables out there that really lend one to believe that the bottom is either going to be made this week or we are in for some real pain. And it's unfortunate because going back, it's like and I'll touch on this very briefly. It's like we had several members that, saw a lot of this coming. They saw it. They were wrong for a decent amount of time before ultimately they're starting to be proven more and more correct as the days go by. I think the one thing that's important and the one thing that regardless of whether or not people agree or disagree, when it comes to the Roadhouse and in this room, if you are strong enough to stand up for what you believe in and what your thoughts are, stick around. Stick around because everybody has an opportunity to be right. The way to go about it may be different than what was done. The results are the results. We are now facing an environment that is being forced upon us, that is very, very negative and very, very bad for equities and very bad for the economy and very bad for people standing in the grocery line or at the gas pump. It's not a good scenario. And I say this where everybody really, really understands that when the Fed decides that they are going to do something, they're going to do it and they're going to overdo it. They're going to overdo it to the upside. They're going to overdo it to the downside. So that's where we are. And so we have to listen for the messaging on Wednesday. We have to see, more importantly than the messaging, we have to see how the market wants to react to what they have to say. So that's all I have to say about any of that there. Bender, do you have anything else for the people?
No, I don't think so. I mean, I posted that chart. There's a 3-day time frame, and I did that because it shows kind of these trend lines that I was talking about, where they came from, and I tried to get rid of, obviously I got multiple sets of fibs that I put on the chart to try to come up with where the high probability levels are. I tried to take as much as I could off this chart and clean it up, so it's really just one set of fibs on there, and then longer term, so you can see those trend lines that I was just talking about. But
we keep
the one thing that I do want to say is that regardless of and I appreciate the more macro view and the sort of economic impact of all this, and I rely on all that, you guys, for all that stuff. Me, it's just I just want to look at the chart and try to figure out what makes sense. But I think it is very easy to get caught up in just directional bias and not just playing those levels, and that's how we screw ourselves. Better off if we come in sort of like, well, the rest of this stuff, at least short term, when you're trading shorter term stuff, it's like the rest of this stuff doesn't really matter, because if you let it matter, then you won't be able to just play the levels in the direction the way that you should play it, regardless of the news cycle and the headlines and things like that. Pick your levels and just stick to them.
And it's interesting that you say that, because you're also not going to be able to flip a switch.
It's tough. It's tough.
Like once you get into a certain sentiment and it's like, even going back to the bull runs that we've had, once you get that idea, buy calls every day, buy calls. It's like, it's difficult to pivot off of that. It's difficult to when you see that big gray candle that you've dominated for so long, buying calls against that or buying shares against that big gray candle, knowing that if nothing else, in 30 days, you're going to be sitting there rolling in it. If nothing else, when you get a market like this, it becomes a little bit more of the reverse of that overall psychology, to where now you're getting more and more people that are looking like, if there's even just the sniffing of a green candle, you short that, you short it, you short it, you short it. If there's an upside day, let me release some of the baggage so the pain doesn't hurt as much, so I don't get hit with another margin call or a liquidation alert or something along those lines. This is all a part of the game and the psychology, but it also goes back to not being over leveraged in any capacity as far as what you're doing. If you're over leveraged, this is about as painful gets.
Cool.
There are lessons to be learned no matter what, and that is to respect your margin, respect your leverage, respect your capital. No matter which way the market is going. I think Bender brought up a really, really great point. As far as if you're just trading the levels, you can kind of work some of that psychology away and try to create a brain set that does not carry a bias. That works for some people. It doesn't work for others. But I can say this, it's like nothing lasts forever. Both bull and bear, everything is cyclical. Everybody eats eventually. If we go back to that period of time, really from 2016, maybe 2014, all the way up, and we got a timeout with the pandemic, but we're talking about 6 years, going on 6 years with the exception of maybe about 3-4 months to where bull feasted and bear was, bear was starving and on the verge of starvation. It got its snack in 18 when the Fed did its thing. It got its snack again with COVID. That was a short-lived snack. We're talking about 3 to 4 months in 2018, 3 months in 2020. Now with this, with where we are now, you can go back and look at some of these growth and these high, what are we talking about? Things like NFTs, things like a Bitcoin, things like, let's say Shopify. Let's put that in the category also, that have been getting their asses beat now for over a year. And really, we're not necessarily looking at what's been going on for over a year now. We want to focus on what's been going on for the last 6-7 months. This period of time that we're living through now is much longer than what we've seen since probably 2014, if not before that, 2012 maybe even 08. But it's like we haven't had this. We haven't been served with this. But everything is cyclical. Everything comes back around. Everything. So that's all I have to say. Bender, thank you so much. Stockington, thank you so much. Anybody want to add anything else? Anybody in the room have anything to say? Any setups? Anything lovely to put out there? All right. Well, we're about to get into it. Got about 17 minutes. Everybody position their brains the way you need to position to give yourself the best opportunity for success. And know this, your emotions, if you allow your emotions to dominate your trading and your behavior, you will come out on the short end of the stick. Keep your emotions in check. Follow the flow, follow the chart, follow the levels that Bender put out there. We have an opportunity once again to work together as a team. We shall work together as a team today, and we will come out on the winning side. So everybody, thank you so much for coming, listening to the show.